Hey, how's it going, everybody? This is Micah from WallStreet IO, the number one backtesting platform for swing traders. With a quick update for you, we have a pretty amazing compression happening right now in Apple. You can see we've been basically moving up, but with a really tight compression, especially over this last week. Now, Apple's MACD is very neutral. In fact, this thing has been going sideways for about a month now. It looks like it's going to cross to the bears. However, it could just be pinching, and depending on how we trade this week, we could actually start to see this thing lift off again to the upside if and only if the stock can get above and stay above the 175 area. This has been resistance for the last week. It was resistance about a month ago. So if we can get up and above this area and stay above 175, I think we're going up to 180 at least. Now, if we can't get over 175, then more compression or potentially even a new bearish cycle could be in order for us. But again, we're kind of pushing up against this level. And right now we are looking at a Heikin-Ashi chart, which is my favorite kind of chart to use because it shows these naturally occurring cycles I call payday cycles. A payday cycle is a 4 to 8 day cycle in a stock. They're naturally occurring, they're already happening anyways, and they make for great swing trades because it's this perfect time frame from 4 to 8 days. Now, when we flip over to a candlestick chart, you can again see this compression we've had, and Friday's action, which had us bounce right off this rising wedge support line and push back up to about 175. So come Monday, right, tomorrow or anytime this week, if we start trading above 175, and if we can hold above 175, I think we've got at least a few dollars, maybe even $5 more of potential upside. We've had this really big downtrend. It looks like we are starting to bounce pretty nicely off that over the last couple months. And again, if we do break 175, I think we could have a nice little rally on our hands. Now again, as I mentioned, the MACD has been very neutral for the last month. However, a break above 75, and if it holds there and starts to run, we likely could see the MACD start to peel away back to the bulls, which is going to be pretty cool. Let's take a quick look here on WallStreet IO. I want to take a look at the last few payday cycles, and then I actually have one more stock I want to show you today, which is Amazon. Okay, so let's take a look. I'm going to go ahead and put back the Heikin-Ashi candle right here. I'm going to open up our one-click backtester, and I'm going to backtest the payday cycle over the last 3 years. The payday cycle strategy is really great because it takes advantage of these naturally occurring cycles. They're already happening anyways. And essentially what I'm backtesting right now is how well I would have done if I would have bought on the first green candle and sold on the first red one. So like buy on the first green, sell on the first red. It's the simplest strategy you could ever implement in the entire world of swing trading. Now, when we take a look at this over the last few years, it's got a pretty good risk reward, 1.9 risk reward. This means that you're going to make about $190 on average for every $100 of risk. So that's good risk reward. It's got an okay batting average. Now remember, I'm not applying any secondary indicator to it like the MACD, which I'm going to show you in a second. But with this risk reward, this batting average actually works. This strategy is good for about 31 trades a year, which means that you're going to get 2 to 3 trades a month out of it, right? Now, when we take a look at this, I'm going to hit Shift V on my keyboard, and we can see this green shading represents all the different trade spans for this strategy. And the green means it was profitable. Okay, So we had a small loser here, but you can see 1, 2, 3, 4, 5. This strategy has performed with profitability for the last 5 times in a row. Now, what's interesting about that is that if you take a look at these last 5 wins, they all occurred, actually 6 out of 7 times here. All of those wins occurred while the MACD, surprisingly, not really, surprisingly was bullish, right? So while this MACD has been bullish and crossed to the bulls and trending up, we've had 6 out of 7 winning trades. 6 out of 7. That's pretty darn good. Now, while the MACD was crossed to the bears and trending down, we had a whole sequence of losing trades. Surprise, surprise, not really. When the MACD's crossed to the bears and trending down, this strategy, when it's used in the bullish form, doesn't work as well. So what I usually try and do is tell people to avoid buying Apple on bullish payday cycles when the MACD is bearish, because it's a counter trend trade. And you can see by this easy and quick example that when the MACD is bullish and trending up, you have a lot of winners, and when the MACD is bearish and trending down, you have a lot of losers. So what does that tell you? Maybe you should avoid trading Apple to the upside during these times when the MACD is really bad, which will hugely improve your risk reward and your batting average. You'll be trading a little bit less, but the trades that you do take will be a lot more profitable. Okay, so right now we are in a profitable bullish payday cycle, and if we break 175 to the upside, it'll become even more profitable. Okay, so I hope that helped kind of give you a quick idea of how to use payday cycles and the MACD in correlation with each other to improve your risk reward and batting average. Okay, now one more quick thing. I want to show you Amazon. If you are a member of our website and you come to my Monday meetup, which is a live coaching call for an hour every Monday, you already know that I told everybody last week that I thought Amazon was in a really cool place, and that if it could hold 1600, we could see an acceleration and a whip to the upside. We're already kind of starting to see that right now, and I think, again, it's about $70 over this 1600 level, but I'm going to go ahead and say it, feet to fire. If Amazon can hold 1600 and continue to hold it for the next few months, I think this has a very strong likelihood of continuing to the upside, like by a lot, especially if this market continues to perform. Also, you can see the MACD is starting to curl up and to the upside. This is a really cool pattern here. Now, Amazon is currently in day 3 of a payday cycle. Today, I'm filming this at Sunday morning, and obviously we're on day 3, but if, again, you attended my Monday meetup, you heard about this a week ago when it was still much lower. Okay, so I just wanted to bring this up again, that keep an eye on Amazon. It could have a much higher target, at least in the very minimum to about 730, 740, and if it really starts to accelerate, maybe 1800, maybe 1900, maybe even all-time highs again. All right, so let's go back to Apple here for a second. Now, earlier I mentioned this whole idea of the payday cycle. It's kind of a strategy that I more or less invented to help myself and our community here at WallStreet.io, because we are a social network, to help our community become better at trading cycles, better at trading payday cycles, better at swing trading, more importantly, better at timing entries and exits. And as you can see by today's quick analysis, simply by using the payday cycle strategy and the MACD together on Apple, you would have hugely improved your results, stayed out of a lot of trouble.